we've seen a significant repricing of the euro, which is a significant component of the dollar index. The Europeans have sort of awakened to what all these tensions and trade tariff tensions mean for Europe, and of course the issue of national security or European security. So the huge emphasis on fiscal spending, infrastructure spending has been a big factor for the euro lift, whilst at the same time, the potential for a truce or at least a break to the fighting between Ukraine and Russia is also a big factor lifting European currencies and risk sentiment in the European area as well. And then in addition to all of that, of course, we've also seen data in the US highlighting how this US exceptionalism that has been a big factor driving the US dollar strength for quite some time is actually starting to lose momentum. The data is starting to come a bit softer than expected, and to a large degree that's a reflection of concerns around what all these policies that President Trump is trying to implement and what they actually mean for growth in the US economy as well.
Is there any indication that the US administration actually wants the US dollar to fall? Is this intentional?
I think that the direct conduit to all of this is that there's a clear drive from the US administration to bring US Treasury yields lower. There's a big refinancing job that needs to occur, and ideally they want to see those yields to come lower in order to refinance at a better rate. And so the move lower that we've seen in US Treasury yields, because of this uncertainty, because of the repricing in terms of growth expectations for the US, has actually pulled the US dollar lower, whilst at the same time, the euro stories are the other factors. So I think they're quite happy to see the US dollar weaker, because of course it's good for exporters, but certainly I think the focus is around lower US Treasury yields for that refinancing task.
Do you think Donald Trump is really thinking through the benefits and costs of having a weaker currency? Because as you say, it's better for exporters, but if you're importing goods as a business or buying goods as a consumer, you're going to have to pay more with tariffs.
Yes, it's a very complicated factor, because when it comes to the US dollar is the big currency in the world, the reserve currency, the liquid currency of the world, or the most liquid currency of the world. And of course, it gives the US economy and the US government potential and power to a large degree. So weakening the currency does have a lot of factors. One, for instance, as you say, exporters can benefit from it, but also it potentially also means quite a lot of inflation coming from the tradable side, from imports and the cost of imports. Whilst all this uncertainty around what the dollar or stability of the dollar also may create a lot of outflows from many long-term investors in particular.
Are you worried about inflation breaking out again across the globe, particularly in the US?
Well, we think that the impact from all these tariff dynamics may not actually be the same for all economies. For the US, certainly the aggressive approach that President Trump is taking has the risk of lifting inflation and inflation expectations in the US, whereas in other parts of the world, like here in Australia, for instance, the whole tariff uncertainty may actually play it out slightly different, in the sense that, if China is no longer able to sell all these products to the US, maybe that China needs to sell them cheaper to the rest of the world, and that's when we may potentially benefit from those dynamics. But certainly, there's also the additional factor that when you think about these tariffs, if you believe they're going to be permanent, it could create this whole idea of repiping of supply chains. And that, as you know from the pandemic, can be inflationary and can actually prove more longer lasting than what people expect.
You mentioned the euro being a big factor in the US dollar decline. How's the Australian currency performing against the US dollar?
Well, it's kind of being caught in these two dynamics. One, the lift in the euro, and also what we've seen in terms of China's prospect for better growth has been a positive for the Aussie. But at the same time, the Australian dollar is a very risk-sensitive currency. So all this uncertainty that is now starting to be reflected in equity markets, it's negative for sentiment. And usually the Aussie dollar struggles in a backdrop like that.
Rodrigo, Catril, thank you.
Pleasure.